Have you structured your remittance? Welcome back to Streams. On this edition of Streams, I'll be giving part 2, part B of the unstructured remittance that we call Remittance Trap. If you have not watched part A of it, go and watch the part A of the Remittance Trap. We're not saying you're not going to help your loved ones. I do, but you need to have it structured. And because of that, we mentioned that people abroad seize your currency but do not see your bills, everything you need to deal with in the country you are resident. Sometimes some people just imagine the house you are working multiplied by what they think the hourly rates are and think that's what you are walking away with. But I'm going to talk about in 3 categories. Number 1 category is the hidden cost of unstructured remittances. A is lack of emergency savings. Very many people abroad do not even have emergency savings. Some might be saying, I don't even know what that means. Emergency savings is what you put aside in the case of emergency. If something were to break, a dishwasher, a washing machine, or a boiler, you have something you can tap into to solve that problem without going on credit card or going for payday loans. But because you have unstructured remittances, you don't have that. Another B of that is what I call mortgage deposit. Some people have not been able to get on the mortgage ladder because what? Money they could have been saving gradually as part of their deposit, guess what? Has been sent abroad for emergencies, for remittances, because it was not structured. Number C, business capital. Some people run some businesses in the countries they are resident, but they could not scale or improve on that business because the money they could have used for capital has been sent abroad to help loved ones. And number D, if you are categorizing that, is what I call investment capital or investment plan. Some people have not been able to start on an investment journey. If you invite them to a training program or they are part of a training course and there's a plan for them to implement a structured plan to benefit their life where they are resident, they say to you, oh, I don't have the money. Why? Because the money they could have used to improve their life in order to help the people they think they are helping, they have sent it abroad under what I call unstructured remittances. Number E is what I call children's future. Some people in the diaspora are delaying the future plans for their children because of remittances that are not structured, that are not planned. And last but not the least, that would be E. F on that category is what I call you just having peace of mind. Some people live abroad, but they are worry sick because there are no safeguards, there are no investment, there are no assets that they can latch on or that can be a get out of jail free card in terms of financial crisis. Everything has been ruined because of unstructured remittances. You see, in part B, how you can turn your remittances that you send abroad to your loved ones to investment, because majority of what people call remittances are just consumption, paying for clothing, food, and some other emergencies. They are principally consumption. But in that framework, you can turn those remittances into an investment, into a positive outcome yielding benefit to the people. Take for example, if you fund training programs for people to acquire skills, that could be an investment. If you pay for education and training, that could be an investment. If you pay to support verified business ideas, that could be an investment. If you pay to acquire skills, vocational training, that could be an investment. Do you know what that would do to your community or to the people you are supporting? You take them from dependency to independence. They become self-reliant, because if you fund dependence so long, dependency turns to right or kind of expectation, and once entitlement kicks in, entitlement then brings frustration, because not only depending on you, now they are feeling entitled to what you are doing or what you are giving. So that is how to turn your, unstructured remittances from consumption to investment. And finally, in bucket 3 is how do you then structure it? Because we've been saying it's unstructured remittances that are bad. How do you then structure it? 1, create a budget. Have a budget for your remittances. Let there be a budget of what you can fund. 2, for your family, friends, and people that are very, important to you, create a limit of what you can afford per time and stick to it. Within that limit also, create an emergency pool, because there will be some situations that you cannot just ignore. They are legitimate emergencies and you may need to support people in that situation. So create an emergency limit, and when it is exhausted, explain it rationally and calmly to people that you may not be able to help in that particular situation. They may need to wait. 3, if you are counting, is set a framework. Like I do tell people, if it's let me have a month or 2 notice if you need my help on a specific thing. Don't wait till the last minute to tell me it's an emergency. No. Let me have a long-term plan so that I can structure my finance to accommodate, especially if you have a lot of people that are dependent on you. 4, set healthy boundaries. You see, setting healthy boundaries is not that you are cold, but it's for you to be able to have the peace of mind, because if you are not in the right state of mind, don't have the necessary peace and productivity, you will not be able to even help the people you think you are helping. So create healthy boundaries. If your budgets are exhausted, explain it in a loving way that you might not be able to help at that particular time. So, and over time, people begin to understand your framework. It works for them, it works for you. It becomes a mutually beneficial structure in a way that is healthy, and everyone can take responsibility. You know what you are committing yourself to do, and they also can know what you are willing to do per time. So create these frameworks and create an healthy, turn consumption to empowerment, turn dependency to independence, turn entitlement into responsibility, and you can reverse this any day, anytime you want, and you can start today. So create a structured remittance to get out of the trap of unstructured remittances. Watch part A and watch part B so that you can have the complete understanding of what this video entails. My hope is that you make the right choice and make a different decision going forward that serves you, serves your vision, serves your purpose, serves your life, and then you can help much more people than you will help if you are frustrated. I hope this is useful for you. Please comment blueprint, and we'll be happy to share some of the materials that you can also use to further yourself on the journey to building a wealth that serves your vision. Please be sure to subscribe. There are more materials on this platform, and of course, there are training programs that you can subscribe to, and we'll be happy to help you on your journey to financial freedom. Thank you for watching, and bye for now.